What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do also provide a weekly technical analysis, and I do also provide a pulse on the market at Hemi137 on X. You can check me out there as well. So let's get started and go over the week. We have a lot of big news just in general. Again, we are winding down from earnings, but you have to understand what is currently playing out is setting up for next year. Ultimately, we only have one big scheduled event, essentially, with monetary policy for December. But aside from that, you are creeping into holiday mode where you get low volume. But you have to understand as well that given with the low volume, what we're going to see is you're getting a lot of headline news, especially because of the conflict between the current administration and upcoming administration and a lot of the changes that they are anticipating. You're seeing, again, the quote unquote Trump effect as of right now, as a lot of people are taking action. A lot of fraud is already being essentially disclosed at this point, and it's just the beginning of what could be a huge explosion of fraud and corruption coming out next year. But we are trying to be prepared for those type of events. So we're trying to look at headline news and decipher everything that's going on so you can take your best position for the week. So with all that being said, let's look over the past week. Now, like I said, we're starting to kind of get more into some of the lesser big names in earnings. I'll still mention them if they are earnings that I always want to keep an eye on. Like some of them give a good pulse on the market and where the consumer's at. And I like to always mention those, but like I've always stated, in the beginning of an earnings cycle, it's always front loaded with industry leaders. Once you get that to that point, the market really doesn't care what else, essentially, what other earnings are there. It is very, very rare in the case where some company will report something. It's typically headline news from a bank or something that could potentially start a bank run that could essentially move the market. But again, understand there's a reason why everything's strategically placed. There's a reason why certain earnings maybe or banks are reporting on a Friday. They're anticipating something to happen with the banks. If it does, there's limit downs and limits up for the markets. So if the market drops 7%, the general index in one day, they'll pause it and hold off for about 30 minutes, and then they'll turn it back on. If it keeps doing that after essentially the third strike, then essentially the market's just closed for the day. And so essentially what would happen from that point, if the market was just crashing, is they would take it into the weekend, they would address it, they would come up with some package, they would do whatever they could. Essentially, this is what's been going on since we've had the downfall of SVB and the banking crisis in which you are still in. Yes, this thing has been going on for over a year, despite what the talking heads are telling you. So again, this is why I do this channel, to kind of give you the underlying tone of the market, so you can know when to apply risk and know when your cycles are, when to put more risk on than others. Being said, we don't want you to miss any of the plays either. I'm not disclosing this information to miss plays. What I'm disclosing this information for is awareness, because if this realistic, the reality of the situation hits this utopic narrative that's pushed out there, that's when you get crashes, and they try to make it seem like it's coming out of the blue when in fact it's not. It's been there the whole time. And so you just need to be aware of these things. Always try to take advantage of discounted stocks. If a stock has some bad news, but it's a great company, obviously do your own research. But if it's heavily discounted or undervalued, it's good to take position in those still in DCA, because even if the market turns over, you could perhaps grab more shares or leaps or options, whatever you do, and then go from that point. And then the market always is designed to go up unless something major occurs. That's by design. So with that being said, let's get into some of our weekly recaps. Over the past week, we've had some of the biggest earnings. I'm going to go into Walmart and Target first. I want to talk about those first because of the fact that this gives you a good pulse on the market. You've seen the difference between Walmart and Target. Target's a little bit more expensive. They're a little bit more aimed towards um, under other products compared to groceries. They've since tried to change that. Again, with all of their current economy, people are essentially, there's been a lot of theft as well in Target. Target's had to close a lot of stores. Target's had a lot of problems in general, but overall, Walmart has done well, extremely well, and it should be alarming when Walmart does well. Again, their general store brands are much cheaper. People can save a couple extra dollars. Being said, it's just much more of a grocery focused type store. So with that being said, they have done well during this time period, and you can see through their earnings, they're continuing to do well. Now the problem being, I'm going to mention this because now you also have we've talked about Home Depot and Lowe's is the same kind of scenario where it's kind of like a Home Depot being the Walmart and the Lowe's being the Target. And then you also have Advanced Auto Parts, right? They just had earnings as well, and they saw a huge boom in their earnings because again, people weren't buying new vehicles; people were repairing their own vehicles, and so when they were repairing their vehicles, obviously their earnings are going to explode, but they get to a point to where they can't even afford to repair their own vehicles. This is where we're at. When you start seeing a decline in advanced auto sales parts because of the fact that they're, again, the consumer is so tapped out, you have to understand that the consumer, uh, essentially in the US, Americans between the ages of 18 and 35 live with their parents. And it's continuing to uptick because again, it is too expensive. Insurance is so high, people can't even afford to live in a home. And if they live in a home, again, or they're essentially having to move in with their parents, again, to one of the biggest working classes there is, a lot of these older generations that are taking their adult children, you have to understand that they're already tapped out. They may be on a fixed income, so they may have to sell a home to provide some more liquidity to be able to support themselves during this hard time. The problem is you can only sustain yourself for so long. The problem is you're getting more and more layoffs, but there's no new jobs being created because the rates are so high. A lot of these businesses, they can't afford to go out and get new business loans, or their loans may be coming to maturity, and what they could afford, a lot of people took out a lot of loans when loans were dirt cheap. But the problem is now loans, you get a loan between anywhere for 3 to 5 years, but the problem is about 3 to 5 years ago loans were about zero, so it was almost free cash. But the problem is now they can't afford, even with the rate cuts that we've had, they can't afford the new loans. And so this is putting them in a bind. So again, they can't hire new people. This is a lot of the cutting and stuff that we've seen over the past year. It helps temporarily, but ultimately understand that um, you can't expand, you can't do anything. You're contracting, so you're essentially destroying GDP and destroying production because interest rates are so high, and the banks don't want to lend. So again, when you start looking at Walmart and Target and Advanced Autos and Home Depot gives you more of an insight to tell you that people just aren't moving, right? Now we saw a huge uptick during the pandemic because people were essentially making improvements to their home, so improving the equity in their home. But ultimately, again, that's even dying down. All these things are dying down. I mean, Home Depot has been again, the winner out of the two between them and Lowe's, but ultimately understand again, the consumer is just tapped out at this point. So, and then we've also had Nvidia earnings. Again, they've absolutely destroyed earnings. Their growth is starting to slow down a little bit. So again, they didn't explode upwards. Again, you're going to get to a point. There are multiple companies that are like this, that their year over year growth has essentially been like 60-70%, but you get to a point to where that starts diminishing and only getting down to 30%, which is still amazing for a company. But when you're crushing it at 70%, that is the new expectation. The 30% shows a decrease. which is not what people, not what investors want to see. So you are starting to come and cooling off on this AI hype cycle. Understand you have to watch price action. This is what I always talk about. Everything is going sideways except for crypto at this point. And when that happens, it's because of liquidity and many other problems. But ultimately, understand the market is waiting to turn over. It's being propped up to this point. I've been talking about this for a long time, and the massive spending that's been going on of the $1 trillion every 90 days. That is a lot of money that is essentially backing banks, and yet banks are still failing because again, when rates were at zero, they were trying to get some. It was easy money essentially to buy a ton of bonds at that point. But the problem is your central bankers raised rates so rapidly, essentially put tons of banks underwater. And so now they in tune, they essentially were doing quantitative easing on the backside for the banks, while the quantitative tightening was happening to all the everyday consumers out there that were struggling to pay for insurance costs, food prices, all just your basic necessities. And we've been at that point. We've essentially been in a global depression, despite what is being told that everything is strong and resilient from Janet Yellen to essentially Fed Chair Powell, the administration, again revising reports to try to push this narrative out there. So again, leading all back to Nvidia strong earnings, but again, ultimately understand. With that being said, we're getting to a turning point. AI will still do well, but the infrastructure is in place. Yes, they are. You have to be very careful because there is a lot of. They were looking for security fraud. Essentially, SMCI got hit with security fraud, and then you had Meta come out and essentially say that they want immunity from security fraud. So did Nvidia, especially with the new administration coming in, because a lot of these companies will be exposed. Again, I do believe we're in a Cold War type scenario with China, with Russia. You want to continue to show strength. You don't want to show any weakness. Again, it's a whole psychological game. You have to understand that's how it's played out. And this is why you're seeing people like when Trump comes in, a lot of people are intimidated by Trump. A lot of countries are intimidated by Trump. Again, he's a businessman, so that helps with a lot of that persona. But ultimately understand that mental figure has a lot of weight. So you have to understand that. And so even when you're talking about chips and AI and trying to lead, you have to put that persona out there to intimidate other countries to not allow them to just go start attacking other countries, because again they have to understand that there's someone else that's looking out for those other countries. And so you have to have that persona or that perspective thrown out there. So I do believe there's some sense of that. Maybe that's why they're looking for immunity. But you've also had AMD, the chief accounting officer, resigning. That is concerning, right? You have a lot of these chief accountants resigning because of these audits that are failing, because again, there's a lot of pencil whipping going on. Surprise, surprise. And I've always said earnings are going to give you probably the closest thing to truth out there. That's not saying it's 100% true. But again, this is why we have auditing that is supposed to be accurate. But apparently, depending who you are and narrative you're trying to drive, the government may step in and suggest that you do other things that may not be maybe against the law, right? And it's still fraud. And so nonetheless, there's a interesting middle ground there nonetheless. So, and then China's ETF saw 2 billion of outflow. China, despite all the massive stimulus that is currently continuing to go on, they're still in a downfall. They're still very economically hurt, and it doesn't help. As soon as the elections have commenced, Trump was announced as the new president-elect. China saw a lot of outflow, because if we start placing a lot of tariffs on China, that's going to kill their GDP. But it's supposed to make us stronger in the long term. Again, we've been in a lot of contracts and negotiations that have been going on forever, us trying to help China, but now it's at the point to where, okay, well, now our infrastructure is severely suffering. we need to start looking internally and fixing ourselves first before we can go out and start fixing other countries, and not just sending billions and billions to Ukraine when our own country is hurting. So, being said, the average rejection rate for credit has hit 22.9% in October, the most uh, since 11 years. It's been the most since it's been in 11 years. So that's insane. So we've talked about banks trying to reduce risk. Banks are in a horrible state. So yes, of course, they're going to reject, even if you have a great credit score, right? Like it is very hard to get loans right now just because banks can't take on any additional risk. And even though if they lower the rates, again, there is still too much risk on the table. Now you can start getting into this discussion about inflation because you start lowering rates. The problem is demand comes back, which essentially causes inflation. But the problem being is that I believe what is going on is it's been so masked and misreported that you're not actually seeing the massive disinflation that is occurring. You are seeing in other products that aren't essentially basic necessities, but basic necessities are still obviously very high. But you start cutting rates, the concern is inflation is going to start coming back. But your problem is that we are spending, essentially the US has been drawing a lot of that because they are spending $1 trillion every day. What happens when you start constraining that amount of spending? Essentially, we remove our debt ceiling cap, and we're just been free spending over the past year to this point. That is what's keeping it up. What happens when you turn off the faucet? What is that going to look like? Well, what it's going to look like is the average everyday consumer has no money. There's no demand that's going to come rushing in to buy vehicles and homes because, again, and because you are essentially at a critical level that you are taking money away from the biggest working class and everything that they've essentially built up as well. At this point, they have no money either. So that demand, you expect it should just, as soon as rates start coming down, that it just floods back in the market, but that's not the case. I think a lot of people are under this illusion, and even during this election, a lot of people have understood that the economy is in such bad shape. That should tell you just the results of the election. People are in bad shape. The economy needs to be fixed. Our economy needs to be fixed because we've been in a depression to this point. You won't know that till after you've already recovered. They will go back and revise numbers and tell you that that's where you were at. Again, because of the expectations, the markets work off of expectations and making sure that you're hitting, but ultimately understand from our broader view of what's actually been going on, you're seeing massive declines in a lot of these industries. And again, nothing is recovered, right? The NASDAQ has been absolutely obliterated. And nothing is, aside from the MAG 7 and AI, which again is I still very much believe in that narrative. But again, you're getting to the point to where you need to start seeing the software side of it represent what the hardware side of it is. And yes, you're going to need more resources, more essentially data centers and energy. You're going to need all these things and chips, but we don't have great use cases right now. There's very few great use cases, right? The next hype will be FSD, and it's not going to have as much impact. Palantir has a great use case, but there's not many outside of Palantir. Right, the Copilot was a great first thing, but again, there isn't a lot of great use cases. And then the next thing will be the hype of humanoids. I've been talking about this for a while. So again, very critical state. So with all that being said, you still have, again, a very weak consumer. So when the spending stops, like I stated, we may get into massive disinflation at that point. And the truth and the realization that when we stop spending $1 trillion every 90 days, that things are a lot worse than anticipated. Yes, I do believe if what Trump is saying, again, we'll have to see. There's a lot of conflict there, so there'll be a lot of constraints on what he can actually do. But I do believe we will get into um, a golden bull market. But again, you have to let the current pent up problems essentially unleash. And so again, they always do create some sort of catalyst to be able to do that. and then they point so they can point fingers. So understand that that is coming, and then that price is in your recession, and then hopefully you can you're not too handcuffed. The new administration coming in isn't too handcuffed to be able to actually make some changes once they actually next thing. So the average rates, okay, we already talked about that. U.S. bankruptcies in 2024 have officially surpassed 2020 pandemic levels. 570 large U.S. companies. Last 3 months alone was 182 companies. So again, the strong and resilience that was shoved down your throat for the past year was trying to buy your vote. Ultimately, again, banks, you're still very much in a again a banking crisis at this point. So that's what you need to understand. And again, a lot of these things are reflected, but again, a lot of these things are in headline news. They're just, again, trying to shove this utopic view down your throat in hopes that you will go buy it. And it's so blatantly obvious right now. I think a lot of America's waking up because of the fact that they've voted the way they voted, because that's not what they are seeing or what they're being told. This is also why you're seeing massive, essentially um, this unwinding of mainstream media and dismantling of it, because people just don't trust mainstream media anymore. You're telling me one thing and that's not the case. Like, things are way worse than that. So and this week we've also got the announcement of Gary Gensler will be resigning essentially as soon as Trump comes into office, which again, he's been holding down crypto, which was surprising because again, he instructed about crypto. And then the fact that when he actually sat in that seat, it seemed like, again, much like Biden, there was someone else pulling strings and didn't want people jumping into crypto. But with that being said, global banks are now own 13% of total gold reserves since the most since essentially the 1990s. Again, everything is setting up for a hard realization, hard crash of everything of this. Again, the reality of the situation hitting this utopic view again, because the vote's already been casted. And so people at this point, again, there's no point. All you're doing right now is saving face for the current administration just to get it to the finish line, which is January 20th. At that point, you can offload everything. And there's a lot of events that are occurring next year with loan maturities, with student loan forgiveness, student loans having to be due at that point. Again, that was postponed until next year. You have the port strike stuff that still needs to be finished up in the new year. You have a lot of other things that are coming due next year that are going to be representation of that, and true numbers, official numbers of how many jobs there actually were through this year are going to be disclosed as well. And it's only going to be part of the year. So you're going to see over 1 million jobs that were essentially again fraudulent. They lied about it, and that's blatantly obvious. They change the reports all the times to draw confusion, but to try to create reports to steer narrative. And so these are the things you need to keep in mind. So the U.S. government may lose between 233 billion and 521 billion to fraud each year. So again, you have all these programs coming out, and this is the bad thing about war. You're sending all these billions to Ukraine, and guess where Ukraine has to buy a lot of that stuff from these companies, your Lockheed Martins, all these industrial complex, right? Boeing, you got to buy all these things, and then again, you get all this essentially this fraud that gets circulated around, and this overcharging of all these products. And somebody's getting rich. It's not us. It's not the taxpayer, right? It's these massive companies and corporations and the military industrial complex. That's who's getting rich off of all this stuff, and everybody all the lobbyists and stuff that are buying politicians, right? That's where all the money is circulating. And understand that is the elite group of these massive corporations, and what they're doing in the reach. So with that being said, NATO also approved, this is one of the biggest news over the week, NATO approved long-range missiles into Russia. Again, it started out with Biden approving missiles, and then it was UK, and then it was France. Everybody in NATO essentially was approving this. Germany was in the news a lot this week as well, as far as prepping for World War III. That has been something that's been trending throughout this week. One thing we did see is that Trump was talking to NATO by the end of the week. Putin says he wants to end the war and come to some sort of agreement. But he will only discuss with Trump. So again, trying to get some sort of peace resolved. But again, this current administration is still poking and prodding the bear to try to get Russia to do something. Again, you have to understand in the 90s, what has happened is that we agreed that NATO wouldn't go past Germany, and then ever since then our creep into the east. And what has happened is since then, since the 90s, what has happened is we've continued to push our way and poking and prodding Russia to try to get them to do something. And now again, we're right in their backyard with Ukraine, trying to get them to join NATO. And again, many times throughout the decades, Russia's even come up and said, hey, we're willing to join NATO, and they just denied them. Originally, they said yes back in the 90s with Clinton, and then now they backed off, and now they're not doing that anymore. Again, you have to constantly have war, because when you have war, you can send billions of dollars and you can lose millions of dollars, and other people are getting rich off of all these wars that are occurring. Because again, when it's war, people just expect all this money to be spent, and then a lot of it goes to the 1%. So being said, this week obviously it's Thanksgiving in the U.S., so the market will be closed on Thursday. We got some data on Wednesday with GDP and core PCE. Again, at this point, not really anticipating any of this to have as much weight as it did in the past. I've talked about this many times before. There will be times when all these things will matter a lot more and have more weight once we start cutting more dramatically. When we start looking for inflation to come back, I think there's some seasonal inflation that is starting to come back. Again, ultimately, understand again, the government's just free spending right now. Once that actually gets put in check, we'll see what the reality of the situation is at that point. And so I expect GDP to come way down. Again, GDP has been propped up by massive amount of government jobs against a lot of regulation that hopefully can be dwindled down. We'll see how much the Department of Government Efficiency can actually do. Again, they're just a third party. Bill Clinton did the same thing when he came into the office, getting rid of a lot of fraud and corruption. But again, they don't have power. They can just make recommendations. And again, you still have to have a lot of the other branches sign off on some of these things. There's only so much the president's office can do by itself, so it needs the other branches to help as well. So, but with that being said, again, be a short week, low volume week. Anytime you have a massive holiday, normally the volume's pretty low. Again, Monday, Tuesday, you'll probably have the best volume, and then when you start talking about, I think Friday should be open. I think the Treasury office might be closed on Friday, but it'd be low volume days. So we'll see. The market can typically move a lot better on low volume days. If there's a lot of people that are still in the market, especially in the last couple of years, it's been that way. Typically, it would just be absolutely dead and you just walk away kind of thing. But the volume has been low just in general with the market, with everything that's been going on, because it's been trading sideways for such a long time. Unless you're in the Mag 7, then that's a different story. But upcoming events, monetary policy is again the next biggest thing. Core inflation is on the 11th, and then we'll have monetary policy on the 18th. That's kind of what we're looking for. Projections come out on the next one. That's really what we're looking at. And then understand you have January monetary policy, which is going to be a big month, because not only do you have the transition for the new president. Again, this is the same time the Fed in 2007 going to 2008, they did a lot of panic cutting in rates in January. And if we start getting realized data, again, realizing that, again, one of the biggest spending days of the year, in Christmas and the holidays, and no one's spending. Apple products are being reduced during one of the biggest times of the year. That should be enough to tell you what's going on. So when all that stuff gets released in January, it's going to be an onslaught of bad information, I think, from January till probably June of next year. And I'm sure it will continue on throughout the remainder of the Trump presidency. So we'll see what happens. But being said, upcoming earnings, again, there's still earnings going on all through the remainder of the quarter. I'll bring them up when I see them ultimately. But as of right now, in my opinion, right, all the front-loaded industry leaders, right? The market's going to move off of them, not off of all these smaller earnings. Now that we have Nvidia out of the way, the market really isn't looking at any other earnings at this point. So just keep that in mind moving forward. Expected moves, again, we're back down to normal at 65. This is our normal trend for the SPX. So we're back at that normal level. Tesla is obviously very high. It's been getting a lot of momentum, especially because of Trump being elected. There's been some good news about FSD and everything potentially being at the forefront of all that, which will help Tesla in the short term. But not only FSD, I think not only the EV cars, that industry in itself, Tesla owns that. They do very well. And that on average, I think that will start doing very well in general in the next couple of years. But ultimately, their FSD, again, a whole other separate, you could essentially create a whole other company out of just their FSD and self-driving robo taxis in that service in itself. And then you're going to have humanoids that are going to back that as well. So who knows? But Tesla, again, is very high. And I think you're going to start to see that reflected. I've been talking about this for a while, about humanoids is going to have that like NVIDIA type moment very, very shortly, in my opinion. So watching that, and this is why they're starting to price in a lot. Boeing is back down to normal 5. JP Morgan is a little high. Typically it's at 4. So the fact that it's kind of making this new normal around 5 is concerning. I'm thinking that they are anticipating stuff to start getting a lot worse going into the new year. Again, I think they're going to start not filtering a lot of the news and start just onslaughting, and then they'll cast blame on the Trump presidency. Again, this is how they control narrative. They'll continue to spend wildly behind closed doors. As long as they can control that narrative, they always have it structured as best as they can. They do a pretty good job. What we've seen over the past year and a half, where they've prolonged a lot of this stuff, try to cover a lot of this stuff up, and then again ultimately understand that again with a lot of the newer news sources give you more insight into what's actually going on, and that again there's a lot of fraud and corruption going on. So we'll see what happens there, but that should be it. Like I said, it's not as exciting anymore because we're waiting for the next earnings cycle, but again, a lot of this information is good for setting up for our next moves and what we can anticipate. Again, we want the market to retract some. Again, on average, the market will pricing in a recession is about 42%. I'm not saying it will go that far, but just know that that is not fully priced in. We've had some rolling recessions. We've seen that with tech in 2022. But again, now at this point, you're going to have some new major pain, I think, with the banking industry, and that's going to all be exposed here in the next couple of months. But again, they'll blame it on the administration. Again, they're trying to win votes, and you have to understand that yes, there is a lot of manipulation and fraud that occurs every time. The longer you're in the markets, the more you realize this. You see with the price action, you see in the headline news, you see in the earnings reports. That's why I talk about all these different things, because you see them before they occur. Not saying you can't take position, like I mentioned before. If you see a great stock or a great crypto that is heavily discounted, you buy. Again, well-known names are what you're going to want to be looking at during a time like this, because again, it will get a lot worse in the next 6 months before it starts to get better. But I think in the next year, we'll go through that pain to finish out the pain, and then we'll start actually recovering from that point. But again, you'll see a lot more pain before we actually get to that point of that turning point. So with all that being said, if you've made it this far, go ahead and drop a like. And until next time, I'll see you later.